I'm joined now by Charles Robertson. He is the global chief economist at Renaissance Capital, who co-authored this report. So good to see you, Charles. Give me the highlights. Give me the headline from your report.
Firstly, that there's been a huge rise in trade. So trade with China and Africa has gone between $10 billion to $100 billion, $120 billion in just 10 years. So it's up tenfold. So we all know China is growing really fast. Its relations with Africa are growing even faster. And the second thing attached to this is then the deals that the Chinese are making in Africa itself. So they're buying exports out of Africa, they're buying commodities, and they're saying, okay, we know we're going to give you money for your commodities, so we're prepared to lend you money then on the back of these receivables, because we know you're going to get export revenues, and you can use that money for investment then.
Because otherwise it might be pretty risky to loan to African governments and companies.
That's been the experience of a number of lenders over decades when there's been
China's effectively taken the risk out of this, would you say?
That's right. They have. And it's smart stuff. And it's very, very cheap lending, and it's very long-term lending.
It's very cliquey. How do they get away with it? Why is it that China's doing that and other countries aren't? What about India?
Their need for resources is greater. So China's importing, over $1 trillion worth of goods. India's still importing maybe 100, 200 billion.
Right.
So China actually needs this stuff a lot more.
Now, is this kind of, would you say, like the perfect partnership, the perfect friendship? Because you have a lot of African dictators who don't want foreign powers coming in and telling them what to do, yet you have this emerging superpower that's willing to look the other way.
But actually they've had some problems where you have political issues, such as Zimbabwe.
Yeah.
There's been a lot of talk of deals, a lot of promises of money, and actually we estimate just $100 million out of $5 billion or more that's been talked about for Zimbabwe. Only $100 million of Chinese money's turned up. China's actually investing in Nigeria, democracies like Kenya, it's going to Angola.
The African leaders. What are the riskiest places that it's going into?
DRC is probably one of the more unstable places, but here, mines, infrastructure, it's happening. It's there. It's a much more difficult place to govern, as I think most people would accept. But it's one of their bigger investment destinations as well.
But Nigeria, you say, leads the pack.
Nigeria is the biggest, according to the Heritage Foundation. We've got big problems with the data. I mean, there's two conflicting sets of figures here, but either South Africa or Nigeria is the biggest destination for Chinese investment.
And it's interesting, actually, to see China giving aid. So it's investing directly in these countries, but it's also giving aid to Africa, which is a bit interesting because China, of course, is a very poor country, and they could use that aid right at home. You could
indeed
argue.
It's about $11.5 billion they've given all over since the 1950s. Their wealth levels improved dramatically in the last 10 years. So about 10 years ago, Chinese per capita GDP was $1,200, $1,500. It's now $5,000. Africa then was around 800. It's doubled to 1,500. It's brilliant. But the gap between it and China has actually really accelerated.
But the real advantage for Africa here in this relationship is that they're getting loans to buy Chinese goods with. Is that right? And low interest, long-term loans.
And the loans are, but also to get Chinese firms coming in, building roads ahead of schedule. I was hearing in Rwanda just a couple of weeks ago, at cheaper prices in Kenya.
We've got to leave it there, Charles. Sure. Thanks very much for being with us.
Pleasure.
Okay.